Something just changed in the Fraser Valley market. Prices have finally stopped dropping and they have started ticking up. But here's the real question. Is this the bottom or just a pause before another drop? We have been hearing for the last 3 years that the prices are dropping. And that's in fact the truth. So today I'm breaking down the March 2026 market update, and more importantly, I'm going to explain what's really driving this market right now, because the numbers alone don't tell the full story. So for the last 11 months, prices have been constantly dropping every single month. But let's see what the real estate board has to say now. Okay, so it says Fraser Valley home prices level off amid improving affordability. After nearly a year of steady price declines, the Fraser Valley housing market is beginning to show early signs of stabilizing. And there's a reason behind that why Fraser Valley board is saying that. Let me share with you some interesting numbers which just got released last week. Stay tuned in this video because some of these numbers will impact the price of your home if you're thinking of selling, and if you're looking to buy, these numbers would look extremely interesting to you. So let's dive into the latest market report. So here is the data from Fraser Valley Real Estate Board for March 2026. There were a total of 1,007 properties which got sold in March. That is 20% more than February. But still, these sales are 3% lower than last year. So yes, activity is picking up month to month, but overall, demand is still weak. So when we see how many new listings came up in March, it was 3,341 new listings, which is also 20% more than February, but it is 12% lesser than last year. So this data is important because what we are seeing right now is not strong demand coming back. It is supply is increasing faster than demand. So the important point is this market isn't heating up. It is adjusting. As you can see, the inventory has increased by 20% as compared to last month. But on the other note, the sales have also increased by 20% as compared to last month. The good point is that the inventory is still lesser than what we had seen previous year. It means the market is slowly getting into a better shape, and I will explain about whether this is going to transform into a seller's market or a balanced market. And here's the key number. The sales to active listing ratio is currently touching at 11%. That means that we are in a buyer's market. Let me show you how to determine whether we are in a buyer's market, balanced market, or a seller's market. When the sales to active listing ratio is below 12%, we are sitting in a buyer's market. And when it is between 12 to 20%, it is a balanced market, which is the best market for all of us. And if it goes above 20%, we enter into a seller's market. So when we were in 2021 or the early 2022, you would have noticed that we were in a seller's market. Things were selling like hotcakes. But now, this chart shows that we are at 11%, which is a buyer's market. And that happens when there is more inventory in the market and less demand. But now the interesting part is single-family detached homes are at 11%, which is a buyer's market. Townhouse and apartments are sitting at 17% and 13%, which as per this chart is the balanced market. So even though sales are improving slightly, buyers still have the upper hand. This market is not being driven by demand. It is being controlled by supply. So what do you say? Is this data helping you with your home sale or your home purchase? Leave your comments below and I will answer each one of those. So now here's where things get interesting. Prices have finally stabilized. As you can see, the composite benchmark price is sitting at 898,000 and it shows an upward sign over there. It means the prices are slowly increasing. The month over month increase is 0.3%. I know it's not a whole lot, but still it's in positive, not in negative. This is the first increase in almost a year. So why is this happening? Because affordability is finally starting to improve. Prices have already corrected 10% to 20%. Rates are no longer aggressively rising. and buyers are slowly stepping back in. But yes, don't confuse this with a strong market. Let's look at the benchmark prices for single-family detached homes, townhomes, and condos. So here it is. Detached homes benchmark price is sitting at $1,375,000, which is 0.3% more than last month. Yes, it is still 8.7% less than previous year. So it means prices have drastically dropped within this last 1 year. The average days on market is sitting at 39 days. And the sales to active listing ratio, as we discussed earlier, is sitting at 11%, which is a buyer's market. And the total number of sales which happened in March was 347 for detached homes. Now let's look at townhomes. The benchmark price is $772,000. And over here, the same trend. The price have gone up by 0.3% as compared to last month. But still, it is 7.3% less than previous year. The average days to sell is 36 days. And the sales to active listing ratio is 17%, which is still in the balanced market now. Earlier, it was in the buyer's market, which was lesser than 12%, but now it is sitting at 17%, which is a good news for a lot of people who own townhomes. The total sales have been 264 for the month of March. Going into apartments, the benchmark price is 489,000, which has also gone up by 0.2% since last month, but it is 9.2% lesser than last year. And condos have been hit the hardest. Average days on market is at 43, and the sales to active listing ratio is 13%, which is again in a balanced market. The total sales have been 279. So this is not a rebound. This is stabilization. And here's something most people are missing. There's a lot of pent-up demand sitting on the sidelines right now. Buyers have been waiting for prices to settle and rates to stabilize. And when confidence comes back, demand comes back fast. Even with improving affordability, buyers are still cautious. Why? Because cost of living is high. It is not easy still to afford properties. Nothing is cheap nowadays. Economic uncertainty is going on. Job confidence is not strong. People are not scared. They are just unsure. This is not a fear market. Buyers are just hesitant to enter into this market. Here's a digested version. When you look at this report over here, you will come to know that all these markets, North Delta, Surrey, Cloverdale, Langley, White Rock, Mission, all of these markets, you see it has got a negative pricing. All these prices have come down when we compare it to 2025. That is for single family residential homes. And when we look at townhomes, these have also been coming down on a steady pace. And condos, similar trend. So when you look at this overall sheet, you can see that nothing is being in the positives. Everything is in the negative. Let me show you the graph, what these different markets mean. March end month, we are sitting at 11%. So it's right over here. So we are in the buyer's market. Anything between 12% to 20% is considered a balanced market. And over 20%, it is considered a seller's market. So you can see that in the previous years, 2021 and then 2022, it was just not only a seller's market, it was like a crazy kind of a seller's market, right? But now the demand has overall gone down and we are sitting in the buyer's market right now. So that is the overall graph for the different markets since 2000 till now 2026. So if you are a buyer, keep an eye on this, days on market. If it starts reducing, it means the market is getting heated up, and if you have not bought a property yet, you should immediately start looking into one. And for sellers, that's a good news. It means the market is picking up. So this is not 2021. This is a negotiation market. Buyers can negotiate big discounts on the asking price. I've seen my own clients negotiating anywhere from minimum $50,000 to even one buyer who has negotiated $400,000 plus on a property. Now, here's the most important factor in this entire market, the interest rates. If the rates drop, buyers will come back quickly. Competition will increase and the prices will start moving up. If rates stay high, market will stay slow and buyers will still stay cautious. This market is not waiting on buyers. It is waiting on rates. And the second important thing is the certainty in the economy. As soon as people have got confidence in this market and the economy, the prices will start going up and the things will start moving faster. So if you're a buyer, this is a very strategic window. There is much more inventory, as I've already showed you. There is less competition because a lot of buyers are still sitting on the sidelines. You have got huge negotiation power, right? Don't just look at the asking price. You have to go and see the property, and if you like it, ask your real estate agent to negotiate big discounts on that asking price. So you are not buying in a chaos, which was in 2021. You are now buying in control. But this window won't last forever. The moment rates drop and there's certainty in the economy, this will become a completely different market. If you're a seller, this is not a testing market. You need to price your property very sharp. Strong marketing should be done. A lot of exposure of the property should be done, and you should very strategically position your property. Because right now, buyers have options and they will skip overpriced homes. But serious buyers are still buying. You just need the right strategy to attract them. This market is not random. This is a cycle. First comes boom, then there's a correction, then stabilization, and then again comes the growth. Let me show you this chart. So as you can see, the prices were pretty low. In 2005, it went up, and then again in 2008, it went down, and slowly it started again going up. And as you can see that the market goes up and there are dips, it again goes up, and then again here is a dip, and this was the peak where the prices were crazily high, and you can then see that there was again a dip that was in 2023. And as you can see, the market is still struggling to go up, but it again goes down because of what all is going on in the economy. So this chart clearly shows you a cycle that in 2020 to 2022, there was a boom. From 2023 to 2025, there is a correction. And now in 2026, there's stabilization. And in real estate, the biggest opportunities happen during transition phases, not when the market is already hot. So the real question is, do you wait or do you take advantage of this window? If you're thinking of buying, selling, or just want to understand your position, reach out to me directly. I will guide you based on your situation. And yes, I need your help. Comment below, do you think this is the bottom or do we go lower? And if you want to know where interest rates are headed next, watch this video right here, because that's what will decide where the market goes next.